When it comes to investing, there are plenty of people online who will tell you to just buy a low-cost S&P 500 index fund instead of picking individual stocks. Warren Buffett is one of those people.
Buy an S&P 500 low-cost index fund.
And even I'm one of those people. My favorite single fund portfolio is just the S&P 500 index. But if you're anything like me, you may get to a point to where you want to dive into researching stocks and build up a portfolio of dividend companies that pay you an additional income stream as well as provide long-term growth. I don't know if you guys can hear that, but my neighbor's doing yard work right now, so sorry for the extra noise. And when I look at dividend-paying companies, I look at them with a very long time horizon. I'm trying to build up a portfolio that not only appreciates in value, but also has increasing dividend payouts over time. So I look for companies that consistently pay and increase their dividends every year. In fact, 4 out of the 5 stocks on this list have paid and increased their dividend for more than 45 years. Now that's the type of consistency that I look for in a dividend-paying stock. Okay, so enough talk. Here are my 5 forever hold dividend stocks that beat the S&P. Number 1, McDonald's. So just about everybody knows what McDonald's is. It's the most valuable fast food chain in the world. It's in the consumer discretionary sector and the restaurant industry. The stock's currently trading at $263.58 as of January 19th, with a dividend yield of 2.29%. And here's how McDonald's is stacked up against the S&P 500 over the past 10, 20, and 30 years, outperforming on each time frame. And when we look at the dividend history, McDonald's has paid and increased their dividend for 46 straight years. They have a payout ratio of 52.9%, which is in the healthy range, and they have a dividend compound annual growth rate of 17.24% over the past 20 years and 8.12% over the past 5. So in general, I love McDonald's and their business. They're steady in good times and bad because people are always going to be looking for low-cost food options. Parents go and spend money where their kids want to eat. Kids love Happy Meals, so regardless of what the economy is doing, McDonald's usually does well. Plus, they have a great business model where 93% of their restaurants are actually franchise-owned. They lease the land and buildings to franchise owners, and that's a business model that has been consistently profitable for a very long time. Just personally, I have a bunch of fond memories of McDonald's. I used to go there with my grandpa when I was a little kid, and with my parents whenever we would take road trips and we would stop to eat. And I know that none of that really matters when it comes to evaluating a stock, but it's always nice when you actually like the company too. Number 2, Lowe's. Lowe's is the second largest home improvement retailer, providing home goods, building materials, and services to do-it-yourself customers as well as professionals. It's in the consumer discretionary sector and the building materials industry. The stock is currently trading at $202.50 as of 1/19, with a dividend yield of 2.08%. Here's how Lowe's is stacked up against the S&P 500 over the past 10, 20, and 30 years, pretty much crushing the S&P on all time frames. And when we look at their dividend history, Lowe's has paid and increased their dividend for 49 straight years. They have a payout ratio of 27.63%, which is really good and shows they even have room to increase the payout percentage over time. They have a dividend compound annual growth rate of 24.11% over the past 20 years and 20.11% over the past 5, which is just amazing dividend growth. Lowe's has been such an amazing performer. Even though they may get hit with rising mortgage rates and a slowing housing market, they've been run so well in the past that it's hard to bet against them continuing to do so. Because even when they have things like slowing revenue, they find ways to improve their operating margin to be able to keep that earnings per share consistent. And I think the mix of do-it-yourself customers and professionals can help smooth out that volatility a little bit, even with a slowing housing market. Overall, they've crushed it for 40 plus years, and I just don't really see a reason that that's going to stop anytime soon. Number 3, Johnson & Johnson. Johnson & Johnson develops medical devices, pharmaceuticals, and consumer packaged goods, and you may know them from everything from Band-Aids to shampoo to vaccines and medicines to medical devices and technology. They're in the healthcare sector and the drug manufacturer industry. The stock is currently trading at $169.40 as of 1/19, with a dividend yield of 2.67%. Here's how Johnson & Johnson is stacked up against the S&P 500 over the past 10, 20, and 30 years, outperforming on all time frames except the 20-year. And if we look at their dividend history, Johnson & Johnson has paid and increased their dividend for 61 straight years. They have a payout ratio of 42.08%, which is in the healthy range, and they have a dividend compound annual growth rate of 8.99% over the past 20 years and 6.03% over the past 5. Johnson & Johnson has paid and increased their dividend for 61 years, which is pretty amazing, and that in itself sends a really strong signal. Plus, Johnson & Johnson has great brands like Band-Aid, Tylenol, Visine, and they're in the healthcare space, so it's an area where it's not really going to see any reduction in demand regardless of what's happening in the economy. Number 4. Procter & Gamble. Procter & Gamble is a consumer goods company with well-known brands like Gillette, Oral-B, Dawn, Pampers, Tide, and Old Spice. They're in the consumer staples sector and the packaged goods industry. The stock is currently trading at $142.42 as of 1/19, with a dividend yield of 2.57%. Here's how Procter & Gamble has stacked up against the S&P 500 over the past 10, 20, and 30 years. And if we look at the dividend history, Procter & Gamble has paid and increased their dividend for an astonishing 67 straight years. They have a payout ratio of 58.36%, which is borderline in the high range, but they've been consistent for 67 years, so it's not really a concern to me. They have a dividend compound annual growth rate of 7.89% over the past 20 years and 5.68% over the past 5. So just like Johnson & Johnson, Procter & Gamble sends an extremely strong message with paying and increasing their dividend 67 straight years. I mean, that is just phenomenal. And just like Johnson & Johnson, Procter & Gamble has great brand power, and it's stuff that you're buying probably every week at the grocery store. Tide detergent, Dawn dish soap, Pampers diapers, Crest toothpaste. As a matter of fact, if I go look at my house right now, there's probably a ton of P&G products that I don't even think about. All right, Tide detergent, P&G product. Dawn dish soap, P&G product. Oral-B flossers, P&G product. Dishwasher pods, P&G product. So as you can see, there's products all over the house that are P&G products you probably don't even know, I didn't even realize, and these are things that we're just going to be buying all the time because we need to wash dishes, we need to wash clothes, and that's a mark of a great business. So see, these are things that we're buying over and over again without even thinking about it because we recognize and trust the brand. And it's not like people are going to stop buying dish soap or stop buying toothpaste because the economy's bad. That's why I think Procter & Gamble is such a great business. Number 5. Waste Management. Waste Management is the largest provider of traditional solid waste services in the U.S. They serve residential, commercial, and industrial end markets and are the leading recycler in North America. Waste Management is in the industrial sector and the waste management industry. The stock is currently trading at $150.49 as of 1/19, with a dividend yield of 1.73%. Here's how Waste Management is stacked up against the S&P 500 over the past 10, 20, and 30 years, outperforming on all time frames pretty handily. And if we look at their dividend history, Waste Management has paid and increased their dividend for 19 straight years. They have a payout ratio of 38.10%, which is in the healthy range, and they have a dividend compound annual growth rate of 32.05% over the past 20 years and 8.87% over the past 5. So Waste Management's a little bit of an outlier on this list because it doesn't have the decades of dividend increase that the others do. But I'm a firm believer that boring businesses that everybody needs are a great candidate for dividend paying stock. And that's exactly what Waste Management is. Waste removal is a service that every single person needs, but nobody really wants to do. And that makes for a great recipe for a long-term profitable business. And Waste Management does that well. Plus, it's not like trash is going away anytime soon. It's not like we can just stop paying for trash service. So Waste Management's a business that I really like. And just to show you guys I'm not randomly naming stocks that I'm not actually buying, I recently moved my business retirement account over to Schwab, and these are the exact stocks that I actually bought, but the plan is to hold forever. Picking stocks is definitely not for everybody, and if the thought of having to research them just doesn't appeal to you, don't worry, there are ways to build wealth without having to do that. Investing in a low-cost index fund that tracks the S&P 500 is a way that a lot of people recommend. Also, if you want to build a dividend portfolio but you don't want to pick individual stocks, investing in an ETF like Schwab's US Dividend Equity ETF, I can never say that, I don't know why, like Schwab's US Dividend Equity ETF are great options to be able to do it in a way where you don't have to do the thinking, you just concentrate on putting your money into it every month and it'll grow over time. But if you are looking at picking individual stocks, tell me which ones are in your forever hold portfolio. Share them down in the comments below. Hope this video helped. If you guys are interested in finding dividend stocks that pay out monthly, check out this video right here where I break down 4 monthly payout dividend stocks that I really like. Hope you guys have a great day out there. Thanks for sticking around to the end. Keep stacking those wins for your family, and I'll see you guys in the next one. Take care. Peace.